people who are here today in presence and actually the many people who are connecting online. Welcome to the conclusive webinar of the Diplomacy Festival, and welcome to the premises of the European Commission representation in Rome. So today we have a panel of very distinguished guests to speak about a very relevant topic, I would say a difficult topic, but a very interesting one, which indeed is about the central bank digital currencies. Just by way of introduction, I mean, I would just like to recall the fact that, of course, the deployment of new technology has really changed the landscape of the financial sector in the past years. And for sure, the COVID-19 pandemic has definitely been an accelerator for this type of trends. In this context, we see a number of digital assets that have emerged, so starting from the crypto assets and the stable coins that are growing rapidly, although their uptake for sure, let's say, in reaching payment has been relatively limited so far. And over the years, there has been for sure a very strong interest linked to virtual currencies issued by big tech companies, including, for example, Facebook Libra. So in all this context, what central banks do, and that's a bit the topic of today, so the fundamental question of what is the role of central banks and the possibility of issuing digital currencies. Let's say that this concept is probably relatively new, although the experimental phase in different parts of the world has actually already started. So the idea for this panel today would be a bit to explain what are the recent developments and what we can expect from the future, trying to understand what are the main opportunities stemming from this challenge, because for sure there is easiness of payments, there are positive effects in terms of competitiveness, but also the risks and the challenges, stemming from financial stability to privacy, to consumer protection, and we'll see what emerges so far. Very last point that maybe I would like to mention as an introduction is the international cooperation role, which will play, of course, a very important role in this respect, and would be very interesting given the distinguished guests we have this evening to understand what role will be played effectively by international cooperation, given also the geopolitical implications of this topic. So we have representatives from the Bank of Italy, the IMF, the European Commission, Intesa Sanpaolo, and the Italian Banking Association. So I will start giving the floor to each of the speakers for about 10 minutes of introductory remarks, kindly asking to respect the time so that we can have maybe a second round of comments and reactions. So I would like to start giving the floor to Mr. Piero Cipollone, who is the Deputy Director General of the Bank of Italy and a member of the high-level working group on the digital euro. So the ECB has launched an investigation into the possibility of issuing a digital euro over the summer. So it would be very interesting to understand what is going on and what we can expect.
Thank you for the invitation, and I will try to stay in the time limits proposed. I want to talk about three things. Why we are thinking about the possibility to issue a digital euros. How is this digital euro going to be issued in case, and what is going on right now and what we have to expect in the near future. So why the possibility to issue digital euros? Last year, in October last year, the high-level task force published a report which was meant to set up scenarios that would justify the possibility to issue a digital euros. The most relevant scenario in front of which we thought a digital euro should be issued is the possibility that the public would lose the opportunity to use a liability of the central bank to pay. Today, the only liability in the hand of the public for paying, the general public, is cash. Bank obviously already have a digital euros, which are the reserves of the bank. So the real point is the retail. And we have seen the trends, right? The pandemia, the COVID-19 pandemia has definitely told us that there is an acceleration toward digital payments, and the possibility that sooner or later the citizen will not have the possibility to pay any longer with the liability of a central bank can become soon a reality. So we need to get ready for this event, and that's why this is one of the fundamental reasons. The other reason is that there are solutions proposed by markets, participants, or say entities that want to exploit the opportunity provided by new technology to supply to citizens private solution for paying based on new technologies. But the very size and the network effect that this could exploit would mean that sooner or later the solution could spread around pretty quickly, and the end game would be, at the end of the day, the possibility that there is a change in the pricing, how people would price their goods. And in this case, the central bank would lose completely the opportunity to manage the monetary policy, because if someone price the goods he wants to sell in a different currency or token, there is no way you can influence the monetary policy any longer. So we need to get ready for these possible scenarios, and it takes time. It takes time to get ready, so we need to start soon. Actually, we already started to think about how to do it, because by the time we have finished, probably one of those scenarios will be with us, and we again need to be ready. How is going to be done? We don't know yet. Certainly, we know what is not going to be. The first fundamental principle is not to harm. Whatever the central bank will do will respect this fundamental principle, which have been stated in many speeches and official document. The last one is the G7, the G7 documents on CBDC and stable coins, where the fundamental principle is that monetary policy and financial stability are fundamental principles which cannot be touched. So whatever we do is not going to harm nor the possibility to run monetary policy nor the financial stability, with all the implication what this means. Therefore, one implication of this is that we have to take care of the possibility that people substitute deposit in the commercial bank for CBDC. And we have to study the implication of this. There has been few analyses so far, which somehow tells that the situation is that so bad. No, it's not that bad. I mean, I've seen a few analyses which suggest that even in the worst case scenario, the effect is not going to be huge, meaning that the substitution will be marginal, and in any case, there are solutions to provide banks with the liquidity that they would lose in case the citizen substitute deposit with CBDC. Now, the number might be, changing, but certainly we know that is not going to be a huge effect. In any case, we need to be ready and to figure out possible solution in case such an event would occur. So we need to put in place instruments that control the demand for CBDC. So, for example, Fabio Panetta, Ulrich Binzheil published recently a paper in which they suggest that one possibility to control it is a two-tier remuneration system, so that you would penalize somehow holding above certain threshold for the CBDC. And this could be a way forward. Obviously, you have to square with this with other solutions, because, for example, is this compatible with, for example, the legal tender solution or if a euro has to be a legal tender, is this compatible with the possibility to pay an interest rate, whatever they sign on this? That has to be analyzed. But certainly the message I want to give tonight is that we are completely aware of the risks, and therefore this is one of the major worries, and we are thinking about instruments to control possible outflow of deposit from the intermediaries into CBDC. So in the last minutes I've left, I want to say what is going on right now. So on July 14, the Governing Council decided to go ahead with the investigation phase. The investigation phase started October 1st, and will last about 2 years. In 2 years, we should have an idea, very much precise idea of how will be the front-end solution and how is going to be the technology behind it, how we are going to implement the plumbing of the digital euro. This should be clarified. We need to, so we will have a prototype for the front end and a prototype for the back end. Meanwhile, we have to have solved the problem of the status of the digital euros. Is going to be a legal tender or not? And if it's going to be a legal tender, is there any change in the legislation we have to make or not? And what would be the right tool to do that? Meanwhile, and all this process will be done in constant contact with the market. We have just part of the architecture of the governance of the process to deploy the digital euro envisage a continuous dialogue with the market through what is called the market advisory group, which has been just selected, and in a few days will be official denomination. So, and this group will include the representatives from the whole value chain of the payment system. At the end of the investigation phase, we will have another decision point where the Governing Council has to decide whether to move ahead or stop the processes. So until then, we have to work hard and try to learn from what we do, observe what is going on around the world, because meanwhile the scenario is changing pretty fast. I would stop here.
Thank you very much for respecting really the times. So I think that actually our next speaker is slightly late. So I would move to the next one in line with the colleague Jan Chaysen from the European Commission, Head of Unit of Digital Finance in the Directorate General in charge of financial services. Okay, I see you connected, Jan, so please, the floor is yours.
Grazie tanto, buonasera da Bruxelles. I'm very sorry that I cannot be with you in Rome this afternoon, but thanks to the digital age, of which hopefully the digital euro will also be soon a part, I can still discuss with you this afternoon. I would like to thank indeed Professor Cipollone for setting out indeed the ECB digital euro project. And I would like to complement his outline by highlighting a bit from the European Commission's perspective why we think indeed a digital euro is a good thing to work on, why we support indeed the ECB's work on the digital euro. And I would like to explain a bit also what our specific role and our specific work on this matter are. From our side, I think we share all the objectives indeed, which Professor Gibolonis pointed out of the digital euro, and I will not repeat them from our side. Maybe from the Commission's perspective, from our, of course, also broader agenda. You know, it is our broader agenda also indeed to build the internal market, to promote the digital age in Europe. I want to add a couple of objectives why we think digital euro is not only important from the perspective of a central bank, from the perspective of the ECB, but indeed also for the broader economic development in Europe. And indeed, I think a couple of factors which indeed support the need to actually work on this are also to work on financial inclusion. Today, I think in Europe, luckily, a large part of the population has, the overwhelming part has access indeed to bank accounts, but that does not apply for the full population. So that is something which has been indeed underlined also by private companies reflecting on offering stable coins, but it is of course also something which is important indeed from the public perspective. I think the second point we see here, and we see a bit from our perspective also that the discussion has started very much or has been triggered or accelerated indeed by the projects or the ideas coming from the private sector. And I think Professor Cipollone mentioned indeed, and you mentioned also indeed the project of Facebook or others. But indeed, actually in the discussion, we realized that a digital euro, that we not only have to look at this from a defensive perspective, but actually it can be a tool very much also to support and indeed promote the digitalization of the European economy. Because we are seeing indeed a lot of research, a lot of actually developments in Europe, in Italy, in other member states on the digitalization of our industry, for example, on digitalized industry applications, on actually digitalized retail applications, on the Internet of Things. And many of these more automated processes in the future will actually also involve more automized payments, sometimes very small value payments, sometimes bigger ones. For example, if with my self-driving car, I approach indeed a charging station and need to process a payment, in the Internet of Things, we will have hundreds or thousands actually of applications in our homes which would possibly be connected, and where indeed, depending on the models, indeed payments may be necessary. So we see very much a digital euro also as a possibility and as a tool indeed also to support this digital transformation of the European economy. And in that sense also to, on the one hand, to enhance our competitiveness, but also provide indeed added value for citizens. And I think a third aspect which we see quite important and quite relevant is that a digital euro can also support indeed Europe's open strategic economy. We are, of course, living in a world where we not only have private companies who are reflecting on payment projects, who have large payment projects. We are also seeing developments in other countries around the world. And while international cooperation in this part is very relevant, we also have, I think Europe has realized over the recent years that we cannot always rely on others, on companies or on countries, third countries actually providing certain services being available. And in that sense, basically, from the perspective also of Europe, indeed having clear means and responsibilities for our own critical systems, and also having a currency, the euro, which has a strong role in the world, we also think it could be helpful and useful indeed to also have a digital version of the euro. I'm saying a digital version of the euro because it is also very important, and also there I think we fully are in line with the ECB, that the digital euro will not replace the banknotes and coins which we have in our pockets. They are a complement basically, and it is up to citizens to decide. When we may see a more tech-savvy younger generation who may use the digital version of the euro, but many others may want to stick to the paper version of the euro, and that is and should also remain actually everybody's choice. So the digital euro is, in our view, it's an additional offer which actually, as Professor Cipollone mentioned, indeed makes sure that also the more tech-savvy, the more digital parts of the Europeans indeed continue to have kind of ready access to central bank digital money, but it is not, let's say, a replacement indeed of cash. I think those are a bit of some supplementary considerations why we do think from the European Commission that a digital euro is useful, and it is useful to work on this project. Of course, indeed, it has to be designed, and that is also has been mentioned already in a careful way. I think one of the key questions indeed to answer over time in this project: what is the role of the public side? What is the role of the central bank, central bank money? And what is indeed the role of, let's say, private money, commercial bank money? And what is the role of the financial sector? Certainly, a digital euro should not replace the savings which we all have in our bank accounts. It is a tool which can be useful in certain areas of payment payment needs. But even in the payment sector, it is not, it should not, and is not, and should not be the only way of doing digital payments. It can complement some of the existing digital payments means which are working very well in certain areas. And we will have to have, I think, and that's probably the ECB who will have to have this discussion in the first place, a thorough discussion indeed on which are indeed the areas and the uses and the use cases where indeed public version of the euro, actually of the digital euro, has indeed advantages in terms of user, in terms of privacy, in terms of financial stability, and which are the areas where probably the private sector can do it better. We also do think that the private sector the financial sector should have a strong role to play indeed in the implementation and the distribution of the digital euro. But that is also something, of course, which needs to be worked out. But that is, I think, indeed a very important challenge going forward, to make sure that the balance between indeed the public and the private sector is well kept here. And in that sense, as I think Professor Cipollone mentioned, indeed the digital euro will not have any negative implications indeed also for the financial system and for financial stability. Now, let me finally mention what the specific, let's say, role and the specific work of the European Commission is in relation to a digital euro. We are looking from our side particularly indeed at the regulatory implications and the needs to actually adjust our regulatory framework to actually enable the ECB, if the decision were to be taken, to issue a digital euro. And we are looking particularly at matters such as, for example, data protection and privacy, how indeed the digital euro needs to comply with the applicable privacy rules, the general data protection regulation, and other rules in place. Because I think also on that we are in full agreement with the ECB. Probably one of the biggest distinguishing means of a digital euro compared to a digital yuan or other currencies is indeed the level of privacy, which I think in Europe is probably compared at the global scale the greatest. And so indeed also one of the biggest advantages possibly of a digital euro and also of its assets in a way internationally will indeed be this high level of privacy. A high level of privacy, which on the other hand cannot go, let's say, at the expense of fighting money laundering. And we have recently from the European Commission made strong proposals actually to enhance our safeguards on this. And so also on that one, we are working indeed with the ECB to see indeed how the existing money laundering rules actually would apply, would be implemented in the context of a digital euro. So those are indeed the matters which from the Commission side, as a, let's say, regulatory body, as the one who proposes legislation in the EU, we are looking particularly at. And for this purpose is indeed based on, let's say, an agreement of Fabio Panetta and my Director General, Sean Berrigan. Actually, we are currently working with the ECB at technical level on a number of these issues to indeed study the interaction between possible digital euro and Europe's financial regulatory system, and how indeed possible adjustments are necessary. But this is, I think, and I want to conclude with that, is a positive process. It's a learning process, I think, for everybody. but that is in itself something positive, because indeed it also brings us all even closer to the digital age, which I think we are witnessing every day stronger. And so in that sense, it is not only a means of digitalizing our economies and digitalizing, let's say, our currency, but indeed also of further digitalizing our own way of thinking as regulators and supervisors and central banks. That is only a side effect, but it is an important one as well, so that indeed also in the future we are all fully equipped to deal both with the future public central bank digital currencies, but also indeed with further private initiatives in this area, which should go hand in hand. I stop there and look forward to the discussion. Thank you.
Thank you, Jan. Thank you very much. And I think you've highlighted very well also some of the trade-offs that are implicated, of course, in this choice. So maybe I would like to give now the word to Domenico Farinza, who reached us now, who is Executive Director at the IMF, in charge for a number of countries, including Italy, to give his perspective from, a privileged role, seeing a number of countries, to understand what is going on from your perspective and what is the position also of the IMF on this issue. Thanks a lot.
Do I need to push it? Yes. First of all, I need to apologize for the late arrival, but it was part my fault, part of the strike, the cab strike, which I had no news of it. So, but anyway, I'm here, and again, I would like to thank Ms. D'Amico and Ms. Mozzi for the invitation to this interesting event on a big issue. It's an issue which is quite important for our future, I would say. Let me get to the point. I think the main question is to understand why there is a business case, or there might be a business case, for central bank digital currencies. There is no doubt that the pandemic has accelerated the debate around the CBDCs. But this is only the impact of the pandemic on the digitalization. The underlying reasons are others, and the reason why policy makers' interest is as focused on the issue is deeper, and it has its roots, I believe, in what we like to call the mobile banking revolution that during the last 15 years has completely transformed not only the payment system, but also banking and insurance in our world. This is particularly the case in low-income countries and emerging economies. I had personally the opportunity to witness the impact of mobile banking on financial inclusion in Kenya at the beginning of the last decade. Nothing short of impressive. People who had never had access to banking, thanks to mobile banking, could keep their savings safe and borrow money when adverse shock hit them, avoiding falling into poverty. This was a game changer. Women could hang on to their money instead of handing cash out to their husband because they were now paid by mobile transfer. Big change in things. Clearly, and I could go on with that. Clearly, electronic payments are way more convenient than both cash and checks. No one doubts that. This is not only true for low-income countries. For instance, I use TransferWise, not my bank e-wire system, to send money to my son who goes to college in Toronto. It's not only faster, but also much cheaper. So, sooner or later, I will close my bank account. I use TransferWise for my current payments, and my investment account keeps all my money. This trend cannot be stopped, we need to understand. Okay. this is not, I think this is not you, the banking system must fully understand that, and it's creating a response. The answer to the question is that the threat that privately issued stable coin, and not only privately, I did not put it down that, but I can say it clearly, but also there is the threat that one dominant country issues that and they get the monopoly of banking. That's the real threat. Stable coins, I should say what they are. I'm sure people know here, but it's always our payment means designed to be relatively stable in value. So the threat that these stable coins replace national issued traditional currencies is concrete. So the recent interest in CBDC and that action that we are all taking is a response to these major risks. There are no reason why, even with my TransferWise transaction, for instance, I should be charged fees for changing dollars into US dollars in Canadian dollars. And that will be something which will move even further. I mean, I should also remark that already in my previous job, myself, my pay was set in special drawing rights. This is quite interesting because special drawing rights are the archetype of stable coins. And also maybe, I should not say it, absolutely, do not question, also of crypto assets, but that's another discussion. The stable coin would be the perfect, the SDRs would be the perfect stable coin if only they were not restricted to prescribed users, no? But the sense of the thing you all tend because you don't want to spend money and cover your exchange rate risk. Why do we have to do that? That's so simple, no? So the bank that was paying me that, they want to take the risk and they would use SDRs. Okay, let me be clear now. I've talked with enthusiasm about the advantage of digital money, but also we need to know, and I think everybody has already talked about that, even if I'm not here. I think Piero. There are major risks. Now, who could try to minimize the risk if not central banks? No, so that's the reason. These potential risks all stems from the public nature of money. So I will not repeat those risks, what these risks are, no, for sake. And they apply, in a sense, money is a public good in a sense, both in terms of traditional money and in terms of digital currencies. So the central banks can play a key role in minimizing these risks if they issue themselves digital money. In a sense, we can think of the competition between CBDs and private issued stablecoin as a replay of the events that led to establishing the monopoly of central bank fiat currency to remedy the shortfalls of a monetary system based on private fiduciary money. In a sense, we have gone through a couple of centuries ago through the same process, so we should not be extremely concerned about that. So we can make it, in a sense. Of course, the end result will depend crucially on the design features of central bank digital currencies. And here we are not yet quite sure what are the key factors. Now will depend who is the issuer, will be the central bank or private commercial banks as agent of the central bank, for instance. Will be account-based or how we say in using an awful expression, tokenized with tokens. Users will be restricted to financial intermediary or will be individuals themselves. The other big issue, the remuneration will be interest-bearing or not. Full or partial anonymity. And then the geographical coverage. I'm sure you are all familiar with the implications of these choices. But the reality is that we do not know enough. We are not yet sure of what is the optimal design of the digital central bank currency. And here the reflections has to go ahead. There is a sense of urgency. I'm not saying on jumping to the process, but there is an urgency in considering careful and come up with credible and effective design. And we are not completely sure. We even ourselves at reform. Therefore, I believe that overall the approach followed by the European Central Bank that is very cautious. Could be maybe a bit, they could move even a bit faster, but it's important that we take time to understand the issues well. But we have to do that now. No? If we try to kick the can away, it will not work. And let me say, the IMF has, first of all, supports the European Central Bank in their cautious approach, but also it has actually stepped up its effort to assist countries in considering the case for SPDs. And also in some cases provide assistance in their implementation. Let me say frankly, El Salvador, the fund advised against the adoption of Bitcoin for reasons that we can discuss, but maybe on which we don't want to get into it, because mainly Bitcoin is not a currency, it's an asset. A currency is a liability, so we cannot do it in a sense. But even now, as we talk, the fund is fully engaged with Salvadorian authorities to understand how and help them how to minimize the risk. And actually my impression, of course, based on limited evidence, is that actually there are some things that are going relatively well. I mean, they got significant capital inflows, that what was thereafter, and they are willing to cooperate in managing the risk. I don't know whether. And here we do that in the dialogue, in the regular dialogue with the authorities we call surveillance, in the multilateral settings, and what's more important, in capacity development. It's basically providing technical assistance to central banks that are considering the issue. Of course, the fund has a mandate which is key in understanding the policy implication in terms of international, in terms of what means cross-border use of digital money for the international monetary system in terms of stability and integrity, which is the main lens through which we looked at that. Then we try to understand the policy implication of using the digital money in national denomination in the domestic cente, again, for domestic stability. And also we're trying to understand the macroeconomic implication on issues such consumer protections, right to mobility, availability of credit, and impact on innovation. So this is an area in which the fund has already started, will start to work with increased attention, not because we have come up with the idea that it's good to do it, but because actually our members are asking it, and we have to do it, in a sense, reflect the interest on that. With that, I think I've abused of your patience, and we'll talk later. Thank you.
Thank you very much. I think now we have the perspective of what institutions actually think, and so now it's good to turn to what the banking sector actually thinks about all of this. So I'm very glad to give the floor to Stefano Favale, who's at Global Transaction Banking in Intesa Sanpaolo. Unfortunately, Stefano, I think will have to leave soon, so we'll be in time for the first intervention. So please, without further ado, have the floor.
Thank you very much. It's a great pleasure for me to join this knowledgeable panel. And the standpoint, the perspective of the bank is, do we need digital euro to do and to perform a lot of things which has been discussed from the panelists today? Because if we look at the electronic money, I totally agree with Mr. Fanizza. We can improve. We are trying to, close the gap with TransferWise, hopefully. That next time I will send some euro in Canada. We can offer some cheaper and faster payments. I think all the system is moving in this direction. No? There is a lot of disruption on this field. But the point when we approached at the beginning as bank on digital euro was, do we really need it? And we were discussing a lot about the risk of this intermediation. And after some months and some study, and I have to say ECB and definitely the Banca d'Italia team also did a lot of work on that, no? And they arrive, I think, to the proper framework in order to work together with the players like the bank and try to understand how implement this new payment system, let me say, because if we look at a new scheme which is issuing, giving the standards to circulate and to exchange money and redeem a token or whatever, this is an alternative payment scheme, no? So the point is how to build it up and what can be the implication for the users, no? Because for the user standpoint, if we look at, a private, one of the 7.5 million Intesa Sanpaolo mobile users, it will be the same in terms of user interface and customer experience to send money through a tokenized card to an account electronic money or through a digital euro. So I think what is important, and this is the reason why we are quite engaged as Intesa Sanpaolo, and I think I start to spread along all the banking system, is that we are anyway working as a representative of the sovereign money. And this is quite important, particularly if we compare the other dark side, let me say, of the coin, no? Meaning that you have cryptocurrency, you have unregulated monies and currencies. So I strongly believe that for the time being, we have to team up, and for the banks there will be a huge opportunity to offer additionally to payments and card, the digital euro, because this means that we are going to play the game with the regulated side of the financial industry. And this is quite important, particularly if we look at the role that the banks have, which is trust, no? And security. So I strongly believe that the bank can really build up on digital euro in terms of security. I think we can definitely implement efficiency in some space. think about the treasury or repo space, no? If you can really create efficiency, if you have also digital asset, regulated digital asset, you want to transfer against a digital euro or a regulated currency. And I think additionally on the cross-border space, no? Because what has been mentioned in terms of transferring a cross-border payment, you can do with digital currency among central banks. There are some exercises in place, and this can be cheaper, faster, and definitely I think can improve a lot of this, let's say, efficiency in the market now on the wholesale space. What I think as a bank we should look at is particularly the investments needed to implement this digital euro. What I mean is we went through a lot of new alternative payments in the last 5 to 10 years, and what is important in order to have, I heard about reconnaissance of as a legal tender, the digital euro. This implies the full acceptance of the digital euro, which means, because we are not talking about banknotes, we are talking about update millions of POS or point of payments all around Europe, no? Which is imply a lot of costs, investments. So this has been to take into consideration. What I strongly believe, if we look, because digital euro, I think you can see as a half glass empty or full, depending on the standpoint and the perspective. If we look at digital euro as something which can really reduce cash, no, by 70%, as some studies explained, I think we see the half glass full. And this is quite important because just in Italy we are talking about 2 billion cost of cash. Piero could be more sharp and precise on that. So we have a business case. The point is, what is the cost to enlarge fully the acceptance, no? Particularly if it's a legal tender, and how to manage not only pocket money and small expenses, no? Because I think this is something we can do, makes sense. I think in the long run, digital euro can substitute the rechargeable card, no? Because it's something which is quite similar. You have any way to charge a digital wallet with central bank money. You can do some, let's say, expenditure of your wallet. The point is, if it's a legal tender, how to manage all the services for the merchants now, because if you look at the big retailer, no, it will accumulate millions of digital euros as a liquidity. So you have to implement all the mechanisms which enable you not to enlarge the balance sheet of the ECB, on the other side to transfer immediately, daily, infra-daily, I don't know, and to also provide some, let's say, statements, no? Because, if you're talking about substituting the cash, if you look at how a big retailer is organized internally, you have, a sort of accountancy by cashier, no? And so this is, for example, one of the implications. I mean, I'm just giving some practical examples of what could be the implication of that. So saying that, I think will be a very thrilling 2 years trials together with the ECB, and definitely we strongly believe we can build value-added services on top of that. Again, I think a network effect is relevant, is important, so we don't have to, let's say, underestimate this impact. Otherwise, the risk is to have an additional infrastructure that we will implement beside others, but that will not ramp up with the speed that we expect and need. No? And this is, I think, quite important. I think one point which has been touched, I think, is relevant for all the banking system, the financial industry, European financial industry, which is the European independence. I think digital euro can really establish, for the first time, a new European payment scheme. No? So it can overcome the fragmentation. We are not like in China or in some East Asia countries that they skip a step. no? They move from, cash immediately to wallet, no? Jumping a little the card age, let me say. We have a lot of legacies. So I strongly believe that in this way we can build a European scheme. Definitely we have to find the balance, as has been said, with the private market. But I mean, this could really overcome the fragmentation and can establish, let's say, a new pillar to be independent, no? Because payments, at the end of the day, is a strategic infrastructure, no? Particularly as we learned in the last 18 months. If we look at 2020, what has been performed by Paytech, they increased the average return in the first 12 months, in the 12 months of the pandemic, which is in 2020, by 20%, no? While the banks, they reduced by 15%, the same average return on payments, no? So this is, I think, a bell which has been, which is sounding very, very clearly, and we have to, step together as market and financial industry in order to regulate, to deeply analyze the implication, and definitely draft the digital euro, giving to the overall industry, to Europe, a value added, in terms of usage, combining some, I think, A2 and value-added services like the digital identity, for example. So I think this can really settle the financial industry in a new age, looking again at the investments, giving us, as European industry, ambitious targets, no? Because if we say, let's try to decrease the cash, we have to go for it. And I mean, we cannot be on voluntary basis. We have to really be fully engaged, because the risk, as has been said, are the stable coins, are other players which are, let's say, on the edge, using technology and better than the banks, better than the banking system, the financial industry, and with a risk to be completely disintermediated and losing the control of monetary base and the stability of the financial industry. So these are the comments from the standpoint, and I stop here to share also some other comments.
Thank you very much for highlighting the implication of the potential digital euro, and what are also some warnings from the sector itself. So for the final intervention, I would like to give the floor to Rita Camporeale, who was head of payment system at the Italian Banking Association, so still the perspective of the banking sector. I know that the association has published a position paper on the central bank digital currencies last year, so it would be interesting to understand the findings and what are the implications also compared to what we heard since now.
Yes, with pleasure, and thanks for inviting me as a representative of the Italian Banking Association. And indeed, I would like to structure my comments around some keywords that the panelists that preceded me mentioned. The first being by Mr. Cipollone, new technology, the need to get ready. Then Mr. Sayson said use cases, complement of banknotes and coins, and then we also have the business case that you mentioned. About new technology, the Italian banks have a tradition in innovating and exploring new technologies. At the Italian Banking Association, since some decades, we have a center for innovation and technology. And with that center, which is called Abilab, we launched back in 2017 a project based on a private permission distributed ledger technology to experiment on it, and applied it to a tiny but very old reconciliation process, which is an interbank process. And we managed to leapfrog from a manual process to a DLT-based project. The project began back in 2017, and we fully implemented it in March 2020, and we now have 100 banks connected to I mean, sorry to mention the name, but to the R3 Corda platform with 100 nodes. So this means that the backbone of the Italian banks are innovation ready. Then we followed the developments, and as our moderator mentioned, we already had a position well before the ECB launched the consultation on the report on a digital euro with 10 principles that our executive board approved as position to go forward. Then the ECB consultation came. We structured our response around some key principles, one of which has many times been already repeated. That's the obvious importance of safeguarding the intermediation role of the banks in the economic system and maintaining financial stability. The other one being the need for the digital euro to be, we would say, in inverted commas, functionally different from the electronic payment instruments we already use. And this is more in the terms that Mr. Favale already explained, in terms of having something which is not cannibalizing on the investments already made by the banks in implementing the new and digital payment instruments and solutions, with a specific regard to the recent implementation about instant payments and the attempt to overcome the fragmentation that we have in Europe, and that the Commission has more than once underlined it should be indeed overcome. So it's absolutely important in this project about digital euro, which we fully support, to go on together, trying to fit all the pieces of the puzzle. And the third key principle that we would like to see in digital euro is a preference for programmability. This is because we think that we should take profit as much as possible of the newest technology to have really a digital euro which is on the forefront of innovation. And to show the benefits of that, while we were waiting for the results of the first analysis from the Eurosystem, we experimented with everyday use cases, making as if we had already with us digital euro, and we experimented the value of using a digital euro in a programmable manner, so a programmability of the currency, and based on the same infrastructure that I mentioned before. And we experimented use cases like the culture pass that we have in Italy, but I know that there are other forms of bonuses all over Europe. The performance of multiple payments for purchasing a set of goods, the execution of split payments, which is one, I mean, you may think of many instances where this is possible, and also the whole process of buying a house with a mortgage. And we experimented the new technology, so DLT-based, with these new cases in order to show that it's possible to simplify processes, have banks providing value-added services to their customers, and also incorporating programmability in the currency. Of course, then we read the experimentations that the Eurosystem has already done, and so we think, and we are fully available to experiment together on the basis of the findings that were already published by the various central banks, including Banca d'Italia, and go together, as Mr. Favale was also saying, towards the goal of having the best possible digital euro. Thank you.
Thank you very much for the last intervention. I think we have 10-15 minutes for a second round of reaction. So maybe I will start again from Mr. Cipollone, if he has some reactions to what was said, and maybe also I would say the warnings that have been put forward also by the private sector, also regarding the non-regulated financial operators and some of the implications that are intrinsically linked to the potential launch of a digital euro.
Yeah, maybe I want to stress one point which is fundamental, because we have been discussing so far as if private money and public money, meaning a liability of a central bank, are the same thing, which are not, obviously. The reason being that private money, in a way or another, carries a credit risk associated to that. Now, why do we really need a liability of the central bank digitalized? Because this is the basis of the pyramid of trust. Today you accept public money because you know you can transfer or can change it at the pair instantaneously with a safe asset, which is the bank, which is the central bank money. That's the fundamental reason. If you don't have this opportunity to say, you know, to go to exchange your deposit or whatever into a central bank, then you might lose trust even in the private money. This is why we need to translate this, you know, reserve of trust into the digital world. So more than the quantity, how much CBDC you need, the fundamental issue is you need some, because it has to provide this basis of trust for the entire pyramid of the private money. This is the fundamental question. So having said that, we have to take care of all, as I was saying before, of all the issue which has been mentioned. For example, definitely the central bank are not going to have a direct discussion with the public, so the enrollment will be certainly done by, you know, what is called the intermediate model. Because, I mean, it's because the idea is that banks integrate in their offer the possibility to use digital euros. I want to say a couple of things about how many objectives has to achieve the digital euro. Be careful not to stretch too much the tool, because, I mean, at the end of the day, you might not achieve any. Let me say one thing, for example. We have thought a lot about inclusiveness. So how do you make digital euro in the hands of someone that doesn't have any account or doesn't have any relationship with the financial system? Basically, you need a tool, a safe tool where to store your digital euros and then exchange it. Well, we looked around, and so far we haven't found any completely trusted device that is able to do that. Imagine for 1 second, just for 1 second, if you have such a device and someone open it or cracks it, and then, you know, in one night you could create an infinite amount of monetary, of of digital euros with, complete destruction of the monetary policy. So, so this is until the technology doesn't allow us to do that. I am afraid the inclusiveness has to be take care with the traditional tools that we have, which is cash at the moment. Another things I would like to point out is this discussion about privacy. Obviously, privacy doesn't mean anonymity, right? Because then we are talking about completely different world. And so far, for what we have learned that using the current system we have, meaning we can provide much higher privacy than the current system can provide, because there are ways in which you can use the central bank digital currency without the central bank knowing anything about your payments, because you can resolve it from a technical point of view. Mimo was saying speed up in the process, but he's right, but there are so many issues to be solved, so many trade-offs to be, to strike the right balance. And that's why it's so time-consuming as a process. Finally, one last word. Again, when we talk about user case or the whys of the central bank, remember that we have to have a very clear what the counterfactual is. The trouble is that if private money spreads around, then you might have a serious problem, especially when the spreads I mean, we already have private money for paying. The fundamental difference is that current private money is denominated in the same currency as the country, say in euros. The point is, if someone comes along and denominates the means of payment in a different, say, can be DM, can be digital yuan, then it's going to, this is a dramatic change, because then the supply of money is in the end of the private sector subject. I don't know how would we be able to handle monetary policy and financial stability.
Thank you very much. And I would also turn the question to Jan Jason to see if you have comments also on these last remarks about the risks in terms of financial stability.
I would concur very much with what has been said. I was also encouraged indeed by the many examples actually of experimentation also from the Italian banking sector, which indeed shows, let's say, the digital euro is not the only child in town, if you want, and it will be part of a broader ecosystem of different solutions. In that sense, I would also want to point actually that from our side, at the European level, we are also working indeed on a regulatory framework actually to bring what is today unregulated crypto assets markets into actually the regulated space and to regulate it to them. This is the so-called MiCA, markets in crypto assets regulation, which we are working on, which would indeed, let's say, provide quite tight and quite tough requirements for general crypto assets, in particularly for the so-called stable coins, which purport to indeed retain a stable value. So the digital euro will be indeed one element and one important, key instrument, but that will be indeed complemented by a quite clear regulatory framework indeed for crypto assets markets in general. I think I would leave it to that.
Thank you very much. And then I will ask Mr. Mr. Fanizza, if he also have some comments. Also, you mentioned the international dimension and the cooperation, which is particularly important. So I don't know if you want to maybe to expand a bit on that to explain how this could work in practice.
in practice, it's not my job. It is. I can give broad lines. No, but this has been quite interesting for me. Yes, I mean, there are obviously how cross-border payments should be interlink and compatible. That's the key point. So there must be. Of course, there is also another simple way, no? That you create a big regional bank, and that solves the issues. But if there are different regional banks, there must be agreement in such that allow the platform can work together to certify payments of the other platform. If you don't do that, the system will not work, I think. And that's the most important aspect, I would say, of any things. But let me say one thing. I think Piero made it very clear what is the risk that, of private money coming up, and the central bank losing its prerogative both on control of money supply and on financial stability. That would be dramatic. So that's the real issue. That's the reason why it is so important the work that you are doing, no? And that's key. I'm also very pleased that the Italian banking system seems very innovation prone, and I like this idea of the distributed ledger technology, which actually I think is the solution to the problem that you were indicating before, which is exactly one big risk of how we are used to do payments now is that everything is centralized in one ledger. So practically, it's enough that there is one person who adds a zero or subtracted zero of the other 2 or 3 on the ledger, you are done practically. Instead, if you use distributed ledger technology, you know that cannot happen because everybody that participates to the group has to verify the transaction. So in a sense, it's now. If I tell you like that, it seems very easy. How you do it might be more complicated. I'm sure that. Also, this idea of let me say, this idea on privacy. I mean, the experience in digital banking was exactly that in mobile banking, is that people started to use mobile banking for payment, for transactions. Those were generally poor people who did not have access to banking accounts. Doing that, they built a track record of payments with no privacy because there was a bank working with them that would have, and then the bank immediately would know the credit worthiness of the person. If the person pays bill partly, they would be willing to give you a small price. So there is a balance to strike there, and that's important. I mean, I still believe that, for instance, in Italy there is scope for large inclusiveness of the banking system to reach areas and people are not covered, in fact. But on the other point that I wanted to say, well, our friend from Intesa was stressing and the importance of investment. Yes, a lot of investment has been done, but it cannot be that handling cash is cheaper than digital money. No way. Look, I've been around. I've seen central banks. We were in Venice for the G20, and they tell me a story that we were at the Bank of Italy. They were delivering, how do you call it, big stack of cash, and they would fall into the canal. so it's and like that there are incredible places where in order to go to deliver currencies you have to go through, you fly with helicopters and things like that. No? So, and cash is really the past. Even I've talked already about my son, but sometimes I give him $20. Say, no, I don't want them. Why? Because I have to buy lunch. They don't take cash. I mean, we already live in a world like that. So the issue is to generalize it and come up with an efficient and effective system. With that, I'm done.
Thank you very much. And then last but not least, to Ms. Camporeale to see any reaction. I think the plea for programmability was well received. Any comment also on the last remark on the investments, maybe?
Yes, thank you. Thank you. Thank you very much. Yes, just some flashes on what I heard. Well, starting from inclusion, our experience, at least in let's say in our Western world, is that financial inclusion goes hand in hand with the digital inclusion. So I may agree that cash is still the inclusive payment instrument, but of course this has to be taken into account when we think of a digital central bank liability. And I'm quite sure that the man in the street doesn't appreciate the difference between a central bank liability and a bank liability, or even a non-banking provider issuing something, which he or she does not even know. And indeed, this is in a way confirmed by the two main concerns that were expressed by citizens in responding to the ECB consultation, whose concerns were indeed privacy and security. So security is certainly something which we all, banking sector, central banks, and the man in the street, we all agree on this, and certainly is a challenge. The fact that we do believe that the pyramid has to be based on central bank money, I think we, on this side of the panel, we all agree. I'm not too sure that it's fully perceived, and therefore, and I come to my last comment, we come to the issue of sustainability. The experience of cash indeed shows us that the man in the street considers that cash is free and is free for all. But we know that cash is not free for the economy. And in the repartition of cost, maybe over the years, the banking sector has, especially with the decline of cash, and I'm not speaking about Italy because we are not yet there, but in other countries, the cost of managing cash has increased. So, over the years. So maybe we should indeed take the example of the business model of cash, which to us is not perfect, to imagine a fully sustainable business model for the digital euro for all parties involved.
Thank you very much. I think that's a very nice conclusion of a very interesting panel, a topic, a debate that will take some time to draw conclusions, but still something to watch very, very closely. Someone defines it as the rising star topic in economic governance, also in the Eurozone, so something to be catch up. So thanks a lot to everybody who followed the debate, and have a very nice evening.